Welcome trader to the free course on binary options. In this course, we'll cover the most basic information and finish with ready-to-use strategies that you can apply in practice. We'll go over how the chart works, how to set everything up correctly, why indicators are needed, and how to use them properly. In this lesson, lesson number 1, we'll go over platform settings, types of price movement, and how candlesticks work. What is all this anyway? And what exactly are binary options? Let's get started with lesson number 1. Let's break down how binary options differ from other types of trading. In trading, there are only 3 types of trading. The first type is when we buy some coin and accordingly wait for it to go up in value. So we buy at one price and then sell it at another. Here we're actually purchasing the asset, and here we're selling it. We actually own this asset. The second type of trading is when we make a contract with other traders. We don't actually buy the asset. So here we have an asset, but it doesn't belong to us. In other words, we don't own the asset, but we make an agreement with other traders about, say, this particular asset. So right here, we make a deal with other traders that this asset is going to go up. So if it goes up, we get rewarded for that entire price movement. On the other hand, traders who made the wrong call and bet on the asset going down since it went up, they lost their money here. Of course, the opposite can also happen. For example, if we bet on the price going up, but the asset actually falls, then we lose money here. When we buy an asset, we can only profit if its price goes up. If the price falls, we still hold the asset, but its value keeps dropping. But in this case, we don't actually own the asset. We can close or sell the position at any time. We make money on its price movement, but we don't actually own the asset itself. The third type is binary options. Here again, we don't buy the asset, we make a bet with other traders. For example, let's say the price is supposed to go up. We bet on the price rising, but with binary options, there's also a time factor involved. For example, I make a bet with other traders that the asset will go up within 1 hour. So I place my option on an increase and make money from that. Other traders who bet on a decrease, they in turn will lose money on that. And of course, it works the other way around too. If the asset doesn't go up in an hour, but instead falls, then I'll be the one who loses. Those who bet on a decrease, accordingly, will make money. So we're not buying the asset itself, we're entering into a fixed contract for a set amount and a specific period of time. We have 2 parameters, the growth and, of course, the time. But unlike the previous case, we don't care about the price movement itself. What matters to us is the core idea. That is, the asset just needs to be higher after an hour than it was when we opened our trade. Then we'll make a profit. If you and I are betting that the price will be lower, then what matters is that after that hour, the price is indeed lower. Then we'll make a profit. And it doesn't matter if the price drops by just 1 point, or by 10, or even by 100. Either way, we'll make a profit. I hope that's clear now. So this is actually the hardest type of trading to master, but at the same time, it's the most profitable. Let's break down how this works in practice and where it all begins. Let's start by breaking down how candlesticks work and what's happening on the chart. Look, right in front of you is the platform where we'll be making money together. We don't need any third-party programs. Everything is right here in the browser. We can work here comfortably together. We also open our account right here. So you deposit your money here and it's securely stored in your account. No one else will have access to it. This really is a truly reliable broker that you can definitely work with, you know? Let's figure out what features this broker offers us. First of all, the first thing we see are the different types of charts. If you just open the platform, you'll see a chart like this. That doesn't work for us. We need to set it to either Japanese candlesticks, regular candles, or Hikanashi candles. Why do we need them? What do they do? Look, we can immediately see the difference. The chart with hiking ashi candles will look smoother. In other words, it will show us the movement. We'll get to that as well. Regular candles will show us more information, but also more noise. Let's figure out what a candle actually is. For example, if we see a candle like this one and it's actually green, let's even mark it that way, just so it's clear what we notice. So here we have a green candle. This means that the price is going up. Here we hypothetically open a trade. And accordingly, if the candle's moving in our direction, we open a buy trade here. And if the price is rising and we see a green candle, then we make a profit on this trade. If we opened a buy trade, but the candle starts to fall and turns red, then at that moment, we lose our bet. That is, this is exactly the amount we used to open the trade. So green candles indicate an increase, like in value. When the price moves up, green candles show that, and red candles indicate a drop. Both candles have the same structure in general. We have the body itself, essentially. That is, it's a rectangle. So here is where the candle opens, and here is where it closes. And we also have two wicks. These show the maximum price the candle reached. So what does this look like? Here is where it opened. The candle started moving up, for example, and then started going down. So it left its maximum here and then started moving down. It also actually left its minimum right here. So right away, a wick is drawn, and we can see that this is the highest value the price reached. This is the maximum. And here is the lowest price this candle reached. And all of this is tied to the time frame. So, for example, this candle was formed in 1 minute. Accordingly, we also have candles such as 15-second candles, hourly candles, and even daily candles, which last for approximately 1 day. And accordingly, they all follow the same parameters. They have an opening, a closing, a minimum, and a maximum. What is the time frame? So if we look at the chart, as you can see here, we have a time frame. If we set it to 15 seconds, then one candle, its entire life cycle from opening to closing, with the opening here and the closing here, takes 15 seconds. So one candle equals 15 seconds. In other words, essentially, if we set it to 1 minute, then for example, one candle will equal 1 minute. Here we have an example of a red candle. Look, for this candle, the opening was here and the closing was down here. And this candle represents 1 minute. So in 1 minute, it moved like this and left these small traces here. Sometimes candles leave big traces, as we can see in the examples. But that's not important for us right now. This is just a basic structure. So how is everything set up here? What is the source of profit here? As I said, we need to analyze the chart in such a way that, for example, if we want to open a sell trade here for, say, a certain period, let's say 5 minutes, then accordingly, our goal is that after our entry point, the price should be lower by that time. And it doesn't matter if it's a few points or even just 1 point lower, we'll be in profit. If the price is higher, we'll be at a loss. So we have the factor of opening a trade, and we have the factor of when our contract ends, after 5, for example, 10, or 3 minutes. Here, you can also choose different time frames. You can open a trade for an hour, and we can see that our trade will close right here at this level. So in order to accurately predict where the price will go, we need to do some analysis. If we want to open a trade to buy, for example, then we need to make sure that in an hour, the price is at least here. Yes, during that hour, the price could move like this. The price might fluctuate and only then move in the direction we want. That's when we'll make a profit. If the price, during all this time, again, assuming we're opening a buy trade, if the price is lower, then we'll be at a loss. Again, by the amount of our stake. I hope that's clear now. Now, what kinds of price movements exist? And how can we make money from all of them? Let's go over the platform one more time, set it up with the basics, and then move on to price movements. In the next lessons, I'll show you how to use technical tools, how to read the chart, and how to use ready-made indicators. And I'll also share our strategies with you. So watch this course if you really want to understand binary options. let's keep going. If you're eager and want to learn more about binary options right now and how our team makes money with them, you can follow the link in the description and join our Telegram channel right away. We share promo codes, ready-made strategies, indicators, and we also break down all the tools separately. So if you really want to learn something new, if you want to learn how to make money on binary options and on financial markets using both simple and advanced tools, then check out the description and subscribe to our Telegram channel. The link to it will be in the description. Now, let's move on and break down the different types of movements that exist here. Let's go over the platform again and set it up completely. Look, right here, you'll see your balance. So you can see exactly how much money you currently have in your account. Next, the second most important button is, of course, the trade amount. So here you can set a percentage, for example, how much percent you want to put into the trade. Or you can also set a fixed amount. For example, $500, $700. Hope you got that. Next, the two most important buttons are buy and sell. You might also have a third button enabled, AI trading. I recommend turning it off because, to put it mildly, it doesn't work very well. To do this, you go here into the settings, then into trading mode, and here you select only these two buttons. Leave them on. Everything's set up here. Next, here we have the trade duration. Here you can choose 1 minute. Don't confuse 1 hour with 1 minute. So first we have hours, then minutes, and then seconds. Seconds. A lot of beginners will have this question right away. Second-based trades are only available on the OTC market. We'll talk about that in the very last 5th lesson, how to work with it, its advantages, and also its drawbacks. But for now, just so you know, 3-second trades are available to us on the OTC market. On the regular market without OTC, the minimum available is 1 minute, and then 3 minutes, 5 minutes, and so on. And accordingly, you can set any time you want for yourself. How do you add these currency pairs to the top? You just go in and start adding them yourself. For example, all the currency pairs with the euro. You type euro in the search, add the currency pair, and it immediately appears on the left for you. So you can do the same for the euro, then for the British pound. Basically, for all the currency pairs you like, you just click the star and it appears on the left for you. I hope we've got that figured out. Besides currency pairs, we also have cryptocurrency here, as well as other stocks and metals. In general, you can find a lot of interesting things here too, but we mainly work with currency pairs. After you've added these currency pairs to your favorites, you need to set the time. Set regular candles. I recommend beginners use either a 15 or 30-second time frame. So we either set regular candles, which we'll be working with, or we use these candles for our trades. So you choose one of these two types. Next, we'll figure out which candles are suitable for what and set it to 15 or 30 seconds. 30 seconds will give us a clearer movement and less noise. That's why these are some of the best candles for beginners. Specifically, this time frame, 30 seconds. After we've set everything up, basically, we can already start making trades, opening positions for up or down. But we don't have the information on what to do next, do we? Let's go over the types of movement. Don't pay attention to these tabs for now. What I have here are indicators. We'll cover them in the 3rd lesson. And we'll also go over this drawing tab. These are technical tools and we'll cover them in the 2nd lesson. For now, let's figure out what's actually happening on the chart and how it's set up. I also want to remind you, if you have any questions or if you want to get an accelerated program, an accelerated course from our professional traders, let me remind you, in case you didn't know, or if this is your first time watching, we have 11 professional traders who are responsible for different areas. So if you want to get a new lesson or new knowledge, just write to our support account. I'll leave the link in the description. And reach out to our traders. They'll be happy to help you and advise you on which strategies to use, how to set up the platform, and of course, help you figure everything out. The link will be in the description. Let's move on. And here's what you really need to know. We have in total 3 important categories of price movement. We have upward movement, and we also have downward movement, and we also have sideways movement, or in other words, accumulation. What does this give us? Look, if the market is falling, like here, we can make sell trades and as a result make good money on this movement. So for example, we can make up to 10 trades on such a small downward movement. In other words, we make bets with other traders that the price will fall and we profit from the drop. Then, for example, we see, like here, that the price is going up. So we should actively make buy trades and accordingly profit from this movement. That seems pretty clear. So if the price is going up, we open buy trades. If the price is falling, we open sell trades. In other words, we work in the direction of the trend. Wherever the market's moving, that's the direction we open positions. But what should we do about accumulation? There are periods in the market when the price just stands still. Like here, for example. Actually, this kind of movement is also very convenient because here we'll be working, just to get ahead a bit, we'll be working from the extreme values. So if we understand that in a sideways movement, we have two boundaries for the price. So if the price reaches the lower boundary, we open a buy trade. If the price reaches the upper boundary, we open a sell trade. So here, there will be a special method for how we'll work. But the main point is that we can work in any market situation. If you think the market is always going up or always going down, you're mistaken. Very often, the market is actually just standing still. In fact, if we open the global charts, we'll see how the price actually behaves, as a matter of fact. There's a long period of accumulation, then we get growth right here. Then after that growth, there's another accumulation phase. After that accumulation, there's a decline. Here too, we have accumulation, then growth, and then accumulation again. And that's how it is with the entire market. So this is a pretty global movement, and the price moves exactly in this way. You'll find these kinds of movements everywhere. Even if we switch to the daily chart, you'll see, for example, that the price just stays in place, not making any moves. In other words, we're not falling or rising anywhere. It's just that on a global scale, it looks like this in the bigger picture. So basically nothing changes for us. Only when there's some news or world events will the price actively fall or rise. We'll go over all of this in the next lessons. Entry points, indicators, how everything works here in detail, and how you'll be able to put the knowledge from this free course into practice and as a result, make money. Let me remind you that I'll leave our contact information and our Telegram channel in the description. Go there and start getting useful, valuable information about the world of trading today. We also regularly share free trading signals. You can become a member of our channel and just watch us for a few days, and you'll already see a lot of new, interesting, useful content that will help you earn money. This video was an introduction, a walkthrough of the platform. We've set everything up and prepared everything for the next lessons, and right away in the next lesson, we'll start with technical tools. I'll even show you an example of a trade, so I'm not saying goodbye to you just yet. Just a reminder, all the links will be in the description. And now, let's move on to lesson number 2.